Most people are taught to fear debt, thinking it leads to financial ruin. But the wealthy see it differently. They use debt as a tool to grow their wealth. In today's video, we're uncovering 5 ways rich people make money with debt, and how you can apply the same strategies. If you're ready to shift your mindset and start using debt smartly, hit that like button and let's dive in. 1. Using debt to buy cash-flowing asset. The wealthy don't use debt to buy things that lose value, like cars or expensive gadgets. Instead, they borrow money to buy assets, things that generate income. Real estate is a perfect example. They take out loans to buy rental properties, collect rent from tenants, and use that money to cover the mortgage. Over time, the property increases in value while they earn passive income. This way, they're building wealth with money that's not even theirs. 2. Business expansion without personal risk. Successful entrepreneurs rarely fund their businesses with their own money. Instead, they use business loans to grow and scale. Whether it's opening a new location, investing in marketing, or hiring more staff, they borrow strategically. The best part? If the business succeeds, they reap the rewards. If it fails, they're not personally liable because the debt is tied to the business, not their personal assets. This limits their risk while maximizing growth potential. 3. Low-interest borrowing versus high-return investments. A wealthy understanding a simple principle: borrow money at a low interest rate and invest it for a higher return. Let's say you take out a loan at 4% interest and invest that money in the stock market, earning an average of 10% per year. You're making a 6% profit on borrowed money. This is how the rich multiply their wealth without using their own cash. The key is knowing where to invest and keeping risk in check. 4. Leveraging debt for tax benefits. Did you know debt can actually save you money on taxes? Wealthy real estate investors deduct mortgage interest, property depreciation, and repair costs to reduce their taxable income. Business owners do the same by writing off loan interest as a business expense. And here's the kicker: if they borrow money instead of selling investments, they don't pay capital gains tax. This is why the rich stay rich. They know how to work the tax system to their advantage. 5. Infinite banking. Borrowing from themselves. Rich people don't just rely on banks, they become their own banks. They use a strategy called infinite banking, where they store cash inside whole life insurance policies. Over time, this policy builds cash value, which they can borrow against instead of taking loans from a bank. The best part? They pay themselves back, with interest, keeping all the money within their own financial system. This gives them complete control over their wealth without relying on traditional lenders. See the pattern? The rich don't see debt as a burden, they see it as an opportunity. The key is knowing the difference between bad debt, which drains your wealth, and good debt, which makes you money. Now that you know the game, how will you use this information? Drop a comment below, hit that like button, and don't forget to subscribe for more strategies on building wealth the smart way.